Okay, let's unpack this. You open your news feed and it's a flood, isn't it?
Totally.
The latest national jobs numbers drop, a big company releases earnings, and then you get these kind of wild political headlines. How do you even begin to connect the dots, figure out what any of it actually means for your world?
Yeah, it's so easy to feel like you're just bouncing from one headline to the next.
Yeah.
The real power, I think, comes from stepping back, seeing how these, well, seemingly separate forces actually interact.
Absolutely. And that's really the mission for this deep dive. We've taken a stack of your sources. We've got the May 2025 U.S. jobs report plus the discussion around it, then the recent Lululemon earnings call, and some pretty fascinating reports on a brewing feud between Elon Musk and Donald Trump.
Right. And we're going to guide you through this material, pull out the essential insights. Our goal is really to show you how these things, national economic trends, a major retailers' performance, and these surprising political dynamics are actually quite intertwined, hopefully give you a clearer, more informed picture.
Yeah, we'll cut through the noise, highlight the surprising facts, and give you the context you need to feel, truly well informed on this specific moment in the May 2025 economy. So let's dive in.
Let's do it.
Okay, let's start with the big one, the May 2025 jobs report. So the headline numbers showed U.S. non-farm payroll employment increased by 139,000 in May,
Okay.
and the unemployment rate held steady at 4.2%.
Right. And that 139,000 figure, it actually came in a bit above the muted estimate of 125,000.
Yeah.
Which felt like a small positive signal, maybe.
Yeah.
Especially after some earlier reports had shown less strength.
Like that weak ADP private payroll number?
Exactly. That was only 37,000.
Yeah.
Or initial jobless claims hitting their highest point of the year so far. So yeah, 139K looked okay on the surface.
Right, so surface level beating expectations is good. But when you dig into the discussion around the report, there are definitely some, let's say, warning signs that caught economists' attention. One key thing, the unemployment rate. Even though it held steady in May, it's now up zero point 0.8 percentage points from its lowest point post-COVID. And sources are highlighting that this is the largest increase in the unemployment rate seen outside of a recession.
Which is, yeah, pretty significant.
Yeah.
And that's reflected in the actual number of unemployed Americans, which has grown quite a bit.
How much?
Well, it's up by 388,000 just in the first 4 months since President Trump took office back in January. And get this, by a striking 25.9%, that's 1.49 million people since that post-COVID low point.
Wow.
Again, these are the kind of moves you typically see, heading into or during a downturn, not supposedly in an expansion.
So what does that tell us when we pair it with other data, like the labor force participation rate? That's the percentage of people either working or actively looking. That decreased again in May.
Right, down 0.2 percentage points to 62.4%. And the employment population ratio also ticked down a bit. And there's some discussion that part of this dip in participation, especially for younger workers, say under 24, might be linked to difficulty actually finding jobs. Yeah, one economist pointed to data showing job postings in some sectors, like software development, we're still way below pre-pandemic levels at the end of May, like 40% below.
So even if the overall number beat estimates, the underlying picture is complex.
Very. It suggests that while some industries are hiring strong, maybe like healthcare, it might be getting tougher to land a job in others. And it's worth remembering, what these numbers are. Non-farm payrolls, that's about 80% of the U.S. workforce. Doesn't include farm workers, military, some nonprofits.
And this report is huge for the Federal Reserve, right? Thinking about interest rates. And it moves markets instantly.
Oh, absolutely. USD, stocks, gold, they all react. And speaking of complexity, let's talk revisions. These numbers aren't final when they first come out.
Right, they get updated.
Exactly. The number of jobs added back in March revised down by a hefty 65,000.
Okay.
And April was also revised down by 30,000.
So wait, that's a combined 95,000 fewer jobs reported for those 2 months than we initially thought. It feels like a big swing.
It is a big swing. But sources are really quick to point out these revisions are, quote, extremely normal and actually by design.
How so?
Well, it happens because more data comes in after the initial release and they recalculate seasonal adjustments. It's the trade-off, you get timely data quickly, but it's preliminary.
So there's a debate then. Is the first number even useful?
There is that debate, yeah. Some argue it's almost worthless because of these swings. But the process itself, the Bureau of Labor Statistics doing this, it's standard practice. It's how they balance speed and completeness.
Okay, gotcha. Digging into a few other specifics from the May report, unemployment rates for different groups, men, women, teenagers, various racial groups, didn't show much big change month over month.
Not really. Pretty steady across the board there.
Yeah.
We did see an increase in people unemployed for less than 5 weeks, which, could be new job losses.
Right.
But encouragingly, the number of long-term unemployed, that's people out of work for 27 weeks or more, that actually decreased.
Okay, that's good.
Yeah, that long-term group still made up about 20% of all the unemployed people in May.
And what about people working part-time but wanting full-time?
That number, part-time for economic reasons, was pretty stable, around 4.6 million. And the group not in the labor force but who say they want a job, also a little change, around 6 million.
But, I sense another but.
Well, one economist did note that specific group grew by about 300,000 compared to April, which, might suggest some people are getting discouraged, maybe stopping their active job search. Hard to say for sure.
Okay. And where did the hiring actually happen in May?
Right. The sectors. Healthcare kept up its strong trend, adding 62,000 jobs. It's actually higher than its recent average.
All right.
Leisure and hospitality also added a good chunk, 48,000. Mostly restaurants and bars driving that. Again, higher than the recent average for that sector. Social assistance jobs also increased.
But, and this is interesting, something we'll circle back to, federal government employment actually declined in May.
Yeah, down 22,000 jobs. It's down a total of 59,000 jobs just since January.
Okay, file that away. What about wages? Always a key number.
Definitely. Average hourly earnings, they rose by 15 cents in May. That's a 0.4% increase. Brings the average to $36.24.
And how does that compare?
That actually beat market forecasts, which were around 0.3%, and it was the biggest monthly jump since January.
Okay.
And year over year, wages increased by 3.9%. That matched April's rate, and it also slightly beat expectations. So wages are still growing at a pretty decent clip, according to this data.
And the average work week, did that change?
Nope. Held steady at 34.3 hours. Third month in a row for that.
Okay, so that's the jobs picture. Definitely more mixed and nuanced than just that headline number suggests.
For sure. Okay, let's shift gears dramatically. Let's look at a specific company, a consumer brand, Lululemon. They just released their Q1 2025 earnings report.
Right, Lululemon. So how did they do? Generally, they beat Wall Street's expectations on the main financial results for the quarter, didn't they?
They did. Total revenue was up 7%, or 8% if you look at it in constant currency, which takes out the effect of exchange rate fluctuations. That brought them to $2.4 billion.
And comparable sales?
Up 1%. Their gross margin also improved, came in at 58.3%, which was better than expected.
Why was that?
The company said it was mainly due to lower product costs and better management of things like damages and markdowns, though they did say higher air freight costs and foreign exchange rates offset some of that gain.
And bottom line, earnings.
Earnings per share beat expectations too.
Yeah.
And they kept buying back their own stock, about $430 million worth in Q1.
Okay, so strong quarter financially. Where did the growth come from?
Well, really strong growth internationally. Canada was up 9% constant currency. China mainland drew a huge 22% constant currency.
Oh, 22%.
Yeah, even with a bit of a negative impact from the timing of Chinese New Year. And the rest of the world segment grew 17%.
What about the U.S.?
Ah, yes. Here's where we start connecting back to that wider economy discussion. In the United States, their revenue growth was, well, weaker, just 2%.
Only 2%?
Yeah. And significantly, the CEO said, and I'm quoting roughly here, that in the U.S., consumers remain cautious right now, and they are being very intentional about their buying decisions.
Cautious and intentional. That sounds familiar, echoing some of the potential softness maybe hinted at in the jobs data.
Exactly. Now, despite that cautious U.S. consumer, Lululemon did say they believe they gained market share in the premium athletic wear category here. So they're still competing well.
Okay.
However, the impact of this dynamic macro environment, as Lululemon put it, it became really clear when they cut their full-year earnings guidance.
Okay. So they expect to make less profit for the full year than they thought before.
Precisely. Lower earnings per share expected now.
And why? What was the main reason they gave?
One big word, tariffs. Increased tariffs. They now expect their full-year operating margin to decrease much more significantly than planned, about 160 basis points versus last year. Originally, they only expected about a 60 basis point decrease.
So tariffs are hitting them that hard?
Apparently so. They said this extra hit is predominantly due to those higher tariffs. They even got specific.
How specific?
They mentioned their forecast now assumes a 30% incremental tariff on goods coming from China and an incremental 10% on goods from other sourcing countries. So this isn't just, a vague concern. It's a direct cost hitting their bottom line.
Okay, so tariffs go up, costs go up. What are they doing about it?
Well, they're implementing strategies to try and mitigate the impact, things like strategic price
Oh,
increases.
raising prices.
Yeah, but they stressed it's item by item, only a small portion of their stuff, and modest increases. Also looking for supply chain efficiencies, managing expenses carefully, that sort of thing.
But will it be enough to offset the tariffs right away?
Doesn't sound like it, at least not immediately. They expect these mitigation efforts to take time to really show results, meaning the hit to their margins will be more pronounced in the current quarter, Q2.
How much more pronounced?
They're forecasting a pretty significant year-over-year decrease in operating margin just for Q2, around 380 basis points. So a big impact in the near term.
Wow. What about their inventory, if consumers are cautious?
Good question. Their inventory is up 23% in dollar value, 16% in the number of units.
Is that bad?
Well, the dollar increase is partly inflated by those higher costs from tariffs and foreign exchange. The company says they're, quote, pleased with the level and composition of their inventory. So they seem okay with it for now.
Are they worried about competitors discounting heavily in the U.S.?
They're definitely watching it. They noted ongoing promotions across competitors and said they anticipate maybe a bit of a spike in that kind of activity in the second half of the year, especially if these macro headwinds continue,
So more sales coming?
potentially from others. Lululemon says they aim to remain a full-price brand focused on innovation, but they are clearly expecting a dynamic competitive market here in the U.S.
Okay. So near-term challenges with margins, tariffs, cautious consumers. But long-term, are they still optimistic?
It seems so. Despite cutting the earnings guidance, they actually maintained their full-year revenue guidance. They still expect 7-8% growth overall, excluding an extra week they had last year.
And still expanding.
Yep, planning 40 to 45 net new stores globally, mostly international, still investing in distribution, tech. And China is still seen as a huge, huge growth opportunity for them. They only have about 154 stores there now, aiming for over 200, still their highest full-price market.
Okay, fascinating. So Lululemon gives us a real window into the cautious U.S. consumer and the direct impact of policy like tariffs.
Exactly. All right, now for the third piece of our puzzle, and maybe the most surprising turn.
Mm-hmm.
The dynamic between Elon Musk and Donald Trump. Sources are now calling it a feud.
A feud, wow. This is interesting because didn't Musk endorse Trump heavily?
He did. Publicly endorsed him in the 2024 campaign, reportedly contributed over $250 million. And after the election win, Trump appointed Musk to co-lead this thing called the Department of Government Efficiency. DOGE, they called it.
DOGE, okay.
Yeah. He served there for a limited time, 130 days, as a special government employee.
So what happened? When did the break happen?
The break and the start of this feud reportedly happened right after Musk left that government role, which was May 30th.
And what triggered it?
A disagreement, apparently, over the president's proposed spending plan. It's been referred to as the One Big Beautiful Bill Act or just the Big Beautiful Bill.
Okay, a spending bill disagreement. How did it become a feud?
It played out very publicly online starting around June 5th. Musk criticized the bill, apparently dug up some old Trump tweets where Trump seemed to express opposing views on certain spending issues from the past.
Ooh, that probably didn't go over well.
Reports say Trump's response was pretty direct, threatening to cut billions, literally billions, in federal subsidies and contracts for Musk's various companies, Tesla, SpaceX, etc.
Wow. Okay, so a full-blown public fight. Now, how does this connect back potentially?
Well, here's where we might circle back to that jobs report detail. Remember the decline in federal government employment?
Yeah, down 22,000 in May, 59,000 since January.
Right. The official jobs report itself includes language saying that this decrease may partly reflect restructuring efforts led by figures such as Elon Musk under initiatives like this so-called DOGE Act.
Ah, so Musk's work trying to make government more efficient might, according to the report's own wording, be a factor in those federal job cuts.
It's presented as a possibility, yeah. A direct, though perhaps small, link between this political figure's actions in government and the macroeconomic data we started with.
Okay. So let's try and bring these threads together now. We've got the jobs report with its mixed signals, Lululemon talking cautious consumers and tariff pain, and this political spat involving a key business figure potentially linked to government job numbers. What's the takeaway for you, the listener?
Yeah, what does it all mean? I think it really shows just how interconnected this whole economic landscape is. These aren't separate stories. They're shaping the world you live in, together.
Right. The jobs report isn't just a number. Those underlying, maybe cautionary signs like unemployment creeping up from its low, participation falling. They could suggest shifts or vulnerabilities in the job market. That could affect opportunities, wages down the line.
Exactly. And then when a major brand like Lululemon explicitly says U.S. consumers are cautious and intentional, that's like a real-world echo of that potential broader sentiment. It directly impacts how and where you might be spending your money.
And their challenge with tariffs? That shows how a government policy decision, like trade measures, lands right on a company's bottom line.
And that impact on their profitability, well, it matters to you because it influences their decisions about hiring, about investment, and yes, about pricing. Lululemon is considering price increases partly because of tariffs.
So a trade policy decision could literally mean your next pair of leggings costs more.
It could, yeah. Meanwhile, you have figures like Elon Musk operating in both politics and business. It shows how these personal and political dynamics can cross over and intersect directly with government actions that have real economic effects.
Whether it's potentially influencing government employment numbers, like that jobs report hinted might be the case with DOGE.
Right, or the potential threats flying around about cutting subsidies and contracts for major companies, as reported in this feud with Trump. That's economic policy being wielded in a political fight.
So these aren't isolated headlines at all. They're signals, almost reinforcing each other. You've got a potentially softening labor market backdrop, maybe meeting cautious consumer behavior.
While businesses are facing higher costs because of policy decisions, which themselves can get tangled up in political dynamics, it's like a complex feedback loop.
Shaping everything from job security to the price tags on stuff we buy.
Exactly. And that's why looking beyond just the headlines, connecting these seemingly disparate pieces like we've tried to do here,
Yeah.
it's so crucial. It helps you see the actual forces really at play in the economy you navigate every single day.
Okay, so let's quickly summarize the key takeaways from this deep dive.
First, the May jobs report. It offered a mixed picture. Yeah, it beat the muted expectations overall, but it definitely contained some concerning signals: rising unemployment from its low point, falling participation, suggesting maybe some underlying labor market softening.
Second, Lululemon. A key retailer confirmed they're seeing cautious consumer spending in the U.S., and they're feeling a significant impact from increased tariffs, enough to make them cut their profit forecast and think about raising prices.
Third, the politics. A high-profile dispute between Elon Musk and President Trump highlights how figures crossing business and politics can be involved in government efficiency efforts, which were cited as a possible factor in federal job declines. And it shows how political disagreements can quickly spill over and involve economic policy tools like subsidies and government contracts.
Okay, so wrapping up, here's maybe a final thought for you to chew on. Given how these different areas, the macro data, corporate performance, political dynamics, seem to be influencing each other right now.
What other surprising connections might be shaping the economy in ways we aren't fully seeing yet? What unexpected indicators or places might you start watching more closely going forward?